All right, I'm sitting here with our only institutional investor, Michael Pettersson. Welcome.
Thank you very much.
Yeah. You remember when we first met?
Yes, in Västerhamnen in Malmö, probably spring 16 or something like that.
Yeah, we were thinking of going IPO, and you were actually the first investor that we sort of pitched to, and you believed in it, and I think we had a strong anchor list of investors for the IPO, and I think many were contacts of yours, wasn't it, up in Stockholm?
Yeah, no, that's correct.
Yeah, no, so thanks for that. I don't know if I've ever officially thanked you for helping us getting that IPO underway. That was good.
Now it's done.
It's done. Yeah, I know. It's sort of almost 5 years later, water under the bridge. Hey, yeah. One thing you would like, I am actually considering to throw another 5-year party. You remember we had Carl Pedal, and I know one of the, odd things about you that you appear on one of the Carl Pedal albums.
Exactly, in 1978.
Yeah, which album was that?
Studio Bellatrix in Malmö.
Yeah.
You
remember the name of the Till Musan?
No, yeah, it must be the second album. Yeah.
Yeah, it's fantastic. And I have actually contacted I've contacted Nick Schröder if you want to come back with a band. And I also want him to bring Amanda Jensen. She was at our party because I saw her over the weekend when she were singing for Ola Salo. Just amazing. And I like her to sing Women Dig for Gold in the USA.
I would like her to sing the Elvis song she did on TV in Talang or whatever it was.
Oh, so you did an Elvis song as well, Amanda?
I think, yeah.
Yeah, she's amazing. I think we were looking out for if you Google on Ola Salo and Amanda Jensen, we got what she did because this was a rerun. This was 6 years ago, but we found their duet. You should really look at that one. Greetings from Space. This is that's her song. Calleth I, calleth you, that she sang. So Ola Salo cried. That's sort of from the Ark. That's sort of their song. But it's yeah. I would love to have Amanda Jensen she was at our party, at our IPO party, but she was sort of a little bit backstage. Yeah, that would be cool. Hey, one of the really cool things about you, Michael, is that you write, I think, the best fund reports in the whole industry. I am actually quite switched on and I read a lot of things, what's going on, but my best monthly update I get from your monthly fund report, because there's so much world news going on and you put it all together in such a beautiful way.
Thank you very much. No, it's quite a lot of fun, and it's quite good for me as well, because there's so much to catch up. And every time I say to myself, okay, because it takes 10 hours at least. This time I'm not going to put in so much work, but then
yeah, so I think you always fail that. I can tell you always fail that promise.
I always under-deliver.
Well, at least on your promise, because I think you always put in the effort. Could you say something about because this is kind of interesting. Because what I find things in your report. So, well, I give you one thing I thought was fascinating, and that was. You remember when Pfizer announced that
November 9?
Yeah, exactly. That was on a Sunday or something, and then
Monday.
on the Monday, yeah. That trading day, you told me never ever before in the world history has so much assets been shifted as that day.
No, it was crazy, and I was. It was 1 o'clock lunchtime, and I was very, very late to go to the office because I've been working from home. So I was in my car for at least 20 minutes before. Yeah, no, it was, but that was quite something that day. It was.
What happened?
But it was a good day.
That people exiting, say, e-commerce because that has gone up a lot, and now when they thought of a more normalization back to airlines, or what happened really?
Yeah, no, I think. I mean, one of the pictures I had in that monthly letter was the spread between Delta Airlines and Zoom Video. Exactly. So, Delta Airlines was up 20% in the afternoon and Zoom was down 20%. So, lots of people lost a lot of money because everybody were very, very long in growth equities, and the people were short value equities. So
you were long in what? Growth equity?
Yeah, like Zoom
like
Video, for example. Exactly. And then you were short in airlines because, for obvious reasons, they still have a very tough time. But, one was up 20% and the other was down 20%. And if you have 2-3 times leverage, you're in trouble.
But you can't, Michael, do you really want to put it on tape that you are short in a share? I think people might go after your short positions now. You remember what happened with GameStop?
No, you should listen more closely. I didn't say I was short.
Yes, no, that's great. Let's not talk about
that. I was actually long, for example, Pandox, the great hotel company.
Yeah.
And I think it was up 30-35% that day.
Yeah.
So it was a special day, but every day is special. Last week, it was the greatest inflow in world equity markets ever.
Okay. And what triggered that to you, would you say?
Well, this is the kind of environment we're working in. We have a world which is engineered by policymakers and a state-sponsored asset inflation. So, it's quite a lot of over speculation and excitement in the markets now because money is for free. So 75% of the cash in the system in the US didn't exist 10 years ago.
Okay, so it's new funds that the Fed has simply...
Exactly, printed money.
Yeah.
And yesterday morning I heard that Bank of Japan, they basically they own all the bonds basically in Japan, but the ETFs, which is exchange traded funds, if you want to invest in Japan, you probably buy an ETF.
Okay.
They own 80% of the equity ETFs, Bank of Japan. So it's state owned.
Is that in Japan or in the US?
In Japan.
In Japan. So
it's a huge experiment. And the debt to GDP is 240% now in Japan.
Yeah.
We have 35 in Sweden.
Okay. So 240% and we have 35. I actually read on CNN yesterday, I think it was the third largest economy is booming back. And then it just said that, and I had to click on it to see which one it was. It was Japan.
Yeah.
Yeah.
Now, and the reason they said that was probably on Friday, it was the first time in 30 years, Nikkei 225, the index was above 30,000.
Okay.
Can you imagine? It took them 30 years to come back.
Yeah.
That was the time when they paid, how do you say this in English? The land where the emperor lives in Tokyo.
Yeah.
That was the time when the investors said that the land next to the palace is worth more than the whole of California.
Wow. Okay.
They were wrong. They were wrong.
They were wrong, yeah. Did you short that? There's some land there?
I not short that. But it's a big party going on right now, but there will be hangover for sure. We will, as you know, when you have a big party, there are consequences.
So that's the same in the financial world as well.
Yes.
Yeah.
That's for next year and the coming 10 years, I think. But we shouldn't spend too much time about that.
Well, yeah, but
because debt is going like this. Debt is exploding, and there are you don't have any strategy for the consequences for it.
What is exploding? You said I didn't hear you.
Debt levels.
The debt level. Okay. Yeah.
So it's sort of liberalism is dead, and it's more and more state-owned. Everything you see, basically. Okay. But the good thing is that it's good for equities this year.
Yeah. No, I know. I have some money invested. You are the only. I have only one fund because you are the smartest fund money in the world because you are the only one who has Crunchfish. So I've only bought in your fund, none other. But it's gone well. I think you're up this year, and last year in spite sort of that it was tough sort of around Corona, but it's I think you ended up pretty solid, 40-50% up or something last year.
No, that was the other fund. The hedge fund was up 27-28%.
Okay, yeah.
But
and you were up this year as well. I saw that.
We have had a good start. We haven't done too many mistakes. That's the
trick.
Yeah.
But looking at your sort of, I think from two perspectives, your investment criteria, because you have at Coeli, we haven't said that, you work at Coeli, and you have absolute equity.
Absolute European equity.
European equity is one fund you have, don't you?
Yeah, that's
you have another one as well. What's that one called?
The other one is called European Opportunities, which is a spin-off really from the hedge fund. And the reason for that was that we have so many things on our table, interesting investment opportunities that we couldn't really do in the hedge fund because the hedge fund is larger. So we said, okay, we want to start up a new fund where we can have decent positions in small companies.
Yeah.
For example, we have shares in Crunchfish. We
are in both funds, aren't we?
Yeah.
You have a little bit in the big one, and you have in this European Opportunities as well.
Exactly. So, but I think it was March 20 or something like that. It was almost, it was in the middle of everything last year. So I spoke to the man in charge at Coeli and said, okay, because we had the fund, it was prepared. So we said, okay, now it's the time to launch it because now blood is on the streets and so on and so on and so on. So we launched April 1st, and that was a good thing to do. So because it was we had a very, very solid performance last year.
It's just gone up from there, hasn't it? You almost have to be really unlucky to invest in stocks at that point, which has gone down, or you have to be badly positioned.
But we are sort of well ahead of the market as well. So
it's good.
Which I basically need to be that in. So.
But it's cool. But what are you looking for? What as a fund manager? I know you have Crunchfish, but before we go into that, why you have Crunchfish? What in general? What are you buying for?
Yeah, no, I might start from the beginning in the answer because Crunchfish is sort of a special case, you can say. But in general, we are looking for companies which we consider to be misunderstood in some way, where there is a value with a significant value potential, and where people like yourself, the management, are focused on creating value. So what we mean by misunderstood is that in general, the markets are very efficient, except where they are not. So that's why we have a concentrated portfolio with fewer and larger positions. So I say that 10 to 15 positions should represent at least 80% of the assets.
Okay.
So and obviously the price we're willing to pay is much less than we think it's worth, but I need a management to act as a catalyst. Otherwise, things will stay cheap for a long, long time. So that's the background. And then they typically end up in situations like what we called nature of value creation. The way I describe that is three things. Firstly, it's sum of the parts. Typically, you don't want to be in there because the market doesn't like it and the price is low. But if there are things happening, it's interesting for us. And secondly, it's restructuring, the improving returns on the margins and reducing capital employed to get return on capital up. And third, which is your bucket then, growth, where we try to find companies which has a best case a monopoly, so which has investment opportunities available to them and not to others for many years, and who can reinvest its cash flow and get very high returns exceeding generic cost of capital for many years. And then if you find those companies, you have a very high multiple growing at a rapid pace. So those are the kind of situations, and the reason we invested in Crunchfish was something like almost 2 years ago actually, when you came out with the news. And to be fair, at that point of time, the fund was significantly smaller. So today it would have been difficult, because we started the fund 3 years ago, and we are up 13 times in terms of assets under management. So it's more difficult to navigate now. But I look on Crunchfish as an interesting option, meaning that, and it also, in general, I'm looking for companies which I'm looking for proprietary assets. And the way I define that, it's assets which are very difficult to duplicate and has some sort of strategic value. So if you put it into a larger machine, the leverage is very high. And if you own a proprietary asset, it generates a lot of cash, and you only need to deploy a small amount of cash every year to get a higher and higher return. So that's the thinking behind Crunchfish. But so far we haven't generated any cash. But I think you will. Otherwise, I would have sold them basically. So
yeah, no, I know you. No mercy. You are a very tough fund manager with your portfolio.
I'm a very simple person. We need to make money.
Yeah, no, that's cool. That's cool. I respect
but
that.
I'm also helping and allocating capital to companies which I like. So it's
sure. No, you certainly did that at the IPO, as we said.
Yeah.
And you, I think Coeli has grown to become. You are our 5th largest owner. You have almost 1 million shares, so it's a sizable. For us at least, you are on our top 10 list that we always publish every month. I know Michael Kretz. When I interviewed him in the spring, he was number 6, and he immediately said, "Who's number 5?" And he had a little bit to overtake, so I said it's Michael Peterson from Coeli. And then when he heard it was another 300,000 shares for him, he left that subject a little bit for now.
I met him on the plane last week, actually, early flight to Stockholm.
Yeah,
he was sitting on he had my seat, my window seat. So I didn't know who it was. I said, "Get away!" But then I realized it was he had to move anyway.
Yeah. No, that's good. That's good. No, but that's kind of interesting. And when you say Crunchfish is like an option, what you mean is sort of it's like a lottery ticket, isn't it? Almost.
Well, that's a little bit too harsh, I would say, because you have okay. So let me extend that. What I mean by that is that you haven't generated any cash. You probably have some very high-tech skilled technique within your system, which you own and control, but you need to find something to put that into, because otherwise if you don't do that, it will forever be an investment boutique, and I'm not really interested in that. So I think for most people own the equity today because they think you can put it into something larger. They think that you find a client or a partner who says that this is very, very valuable for us, and we can make more money with your technique, so we are willing to split something here. That's and the definition of why do I say lottery ticket? Well, that's because you haven't generated any revenue so far, and the market cap is only $40-50 million US, which is in today's world it's nothing. So if you do succeed in what you're doing or in your ambitions, obviously the stock will perform more than 15-20% per year. And that's how an option works over time. But there is in options you also have a sort of a deadline where the expiry date.
Yeah. If you have a call option, they do expire, so you can't do it forever. Yeah, no, that's cool.
Yeah. So that's my definition of that. But it's
but if I tell you, because my plan is to put this proprietary technology that I think we have, because we're strong on doing patents and things, and I think what we announced here over the weekend, that we have put ourselves as the root certificates. It might become quite techy, but what it enables us to do is not only do we own the actual sort of technology for doing an offline settlement, but we're also enabling interoperability. So you could take, say, Swish, and you can go to Japan and pay with that, and that would work. The problem they have currently making that work is that everybody's so focused on online, and it's extremely difficult in every sort of purchase situation to get interoperability between various sort of payment services. But if we just split it in 2 steps, it's not hard. You can do an offline payment, that's easy. We have the technology for that. And then as a subsequent step, it's just a normal payment. International payment or a domestic payment. It's, the industry has done that for a long time. But the beauty is just that patented idea of ours, or patent pending idea of ours, that we split it in two. So the system we're going to put it in, Michael, this is the machine called digital payments in the world. It's fairly big, and we think we have something on top of that. That's the plan.
Yeah. And it's a decent plan, but obviously the news that came out over the weekend, all things equal, has improved your value proposition and your strategic value. So that is great.
But honestly, Michael, I don't think the market gets it. If I should be frank with you, because this is some for me, this is some tremendous good news. But I think it's probably too techy, because I respect that. To understand digital payments, it's like Christina Weishammer from the Swedish Central Bank said, everybody's using digital payment every day, but no one has a clue how it works. So it might be hard for an investor to really understand what we actually are saying with our press release.
Yeah. And you might be right. My view, which I said, when we have talked a couple of times, is that once more normal people, meaning not the tech gurus, can actually see that it hits the P&L, I think you will be as surprised as you are now that nothing is happening, the day after the news. I think the likelihood that you will be surprised on the other side, on the other hand, you will probably, I think and hope that's the case.
Yeah. I don't think they will, because I've been just like you. For me, this is also an option. It has an expiry, as you say, and I think I've been. I've been preparing for this for a long time, and I think it's starting to be all ducks in a row. I really think so, and I appreciate that the market have a hard time to really appreciate it. But if you look at it, almost like if we succeed building something on top of this machine, this system called digital payments, and we can get revenue from that, because my vision is to be in every single wallet in the world, which is fairly big, obviously. Then the value of that, if you take the value of that and multiply it, what is the likelihood? What is the probability we will succeed? And then you take the other dull case that we won't succeed, and what are we worth then? Say digital cash is worth nothing. Surely, I think people right now are counting on almost very little chance of success. Because otherwise, I think we wouldn't be here at this valuation, in my opinion.
Yeah, no, and I think that is correct. And I think the reason for that is that, and this might sound, how should I say, a little bit harsh, but it's not meant to be harsh, is that the reason for that, I think, is that, you've been listed for 4.5 years, and we haven't really seen any revenue, and it's been a little bit, I'm exaggerating now, it's been a little bit of that and a little bit of that. Now I think you hit it. So, for me, I don't have any problems. Firstly, I don't have any problems waiting if you do succeed. And secondly, I don't mind missing the first 50%. And I think that's the thinking behind many investors as well, that they have been, if you look on the 5-year chart on your stock, you can see it's up and down. And now we're on our way up again. So people are probably willing to miss the first part, because if you do succeed, there is so much potential. So they have time to get in.
Sure. No, I think so too. And yeah, absolutely. I 100% agree with you. So yeah, no, that's fine. Again, as you said, we have to translate things to the P&L, the profit and loss statement. Alternative, I think, to get sort of some endorsements by big names or something like that, people can start to have a bigger faith in what's happening. Because I think right now, I'm actually personally more focused, to be honest with you, on getting the right partners in place. We launched this partner strategy because partners will give us revenue instead of just
the risk.
Yeah, and instead of chasing a little bit revenue here and there, I know we don't have much, so maybe I should do that. But to be honest, I focus more on trying to build to succeed big time, rather than to get a little bit of revenue now just to make you happy, Michael.
I share that view.
So yeah. So you're okay with the strategy then of trying to, because we must build momentum all the time, and I think we are.
Yeah.
What do you think about us? Because I am, talking about digital cash. I have an interview series, and I do a little bit food waste. This week is actually focused on food waste, and I've done gestures and I've done the other thing, but I call everything, cash goes digital, a payment pandemic. And what is your view on me biasing the company so hard on the digital cash part?
That's the reason. I think that's the reason to own your stock, basically, if that was the question.
I was just thinking, what's your view on actually going so all in as I do on digital cash, rather than to
okay. No, I think that's I answered it without knowing I answered it. So I think that's the right thing to do.
Yeah. Okay.
Because that's where you really have scale, and that's I would like you to focus on that.
Yeah.
I would like you to sort of.
I think of the 5 solution areas, I think 60-70% of our people is in digital cash, and then we have our developers on the gesture side, and the other 3 areas right now is only almost like pre-study areas for us. There are a couple of 2 people maybe on 3 areas that are just looking into those areas.
Yeah, no, you should focus on that.
Yeah, no, we are. What are we gonna look out for 2021 from, in your opinion, in terms of the world economy? Is this the right time to get into the stock market, or should you stay outside, or if you're not really?
No, this is a very, very big party. So. And you should enjoy it as much as possible, but you should be aware of that you probably will have a decent hangover in the distant future, which is next year. I also learned a new word the other day, which was you always have BRIC countries and FANG equity, and now it was TINROG. There is no alternative. TINROG. There is no alternative out of growth. So, which is good for you. People will come back to growth stocks.
Okay, so, great. Yeah. We like that. So TINROG. There is no alternative.
I thought that was a pretty cool word, actually. I'm going to mention it in my next letter. TINROG.
Yeah. Would you mind would you mind getting more followers? Because can I sort of, because we typically prime people about what this interview is about, because we talked about your newsletter. Can I put a link to it so people could people subscribe, or do they have to own
oh, absolutely, you're very welcome to. So it's that's no problem at all. So the more the merrier.
I recommend. I think you learn a lot about world economy and these things that you don't really read about so easily, like that it's a big party going on, and that people are, a lot of the countries are putting themselves in huge debt in order to sustain their economies, I guess, at the moment.
And we also, I mean, your question 2 minutes ago, I mean, it's very, very unusual that when you go into full speed into, I mean, now it's the worst time for getting ill in general. I mean, January and February, and now we have March and April, and it will get warmer, and you will have the vaccine and so on, and you have a very, very strong growth in all the economies around the world. So it's very unusual that in that kind of environment you have a crash in the market.
No, I think you said there is no alternative to growth. What was it?
TINROG, yes, exactly.
TINROG. I think we talked about TINROG. So growth stocks will come back in fashion. I think so too. It's you need to get back there. But I guess people were going away from that for a while now, because they have been so hyped, I guess.
Yeah, exactly. It was the vaccine, because then I mean, growth stocks need to have a low interest rate, and it's growth mania. It has been growth mania because you have very low interest rates. So when you discount your cash flow, you get a very high valuation.
Yeah.
So and that's why they bought, or the market bought value stocks. But now they are coming back in favor again. And the big tech names, they are delivering phenomenal results. So it's very impressive.
Yeah. No. It's good. We'll. I think it is exciting times. You know, I've done a few ventures on my own in the past. This is sort of my seventh. First one I've taken sort of IPO and gone to the stock market, which is an interesting new thing for me. But it's kind of fun times to be a tech entrepreneur at the moment.
I mean, the other thing which is very important, I think, is that the good thing, if one is allowed to say that, with the pandemic, is that for many companies, they have sort of moved into the future with 3-4 years in 3-4 months.
Oh yeah.
So
that's the case for us. I think that just look at India. I think they don't want to touch cash. They were at over 80% of the transactions retail was cash transactions, and people don't want to touch it anymore. And it goes so quickly. Germany, the same thing. They had 70% cash transactions retail, but because of the pandemic, they are forced to start doing digital transactions as well in Germany. Yeah. So it's coming.
No, so it's for sure it's interesting times.
Yes, I think you can say that. And are you how are you positioning yourself then for 2021 here? Given what you know about the hangover that will be, you know, are you taking precautions already now, or are you just partying, Michael? Yeah. Are you partying at Coeli?
Yeah, to some extent, because we are having exposure to the equity market. So and like most people who have been in the market for 25, 30 years almost, obviously one is a little bit wary about because there are bubbles in some pockets. Yeah. And for sure there will be a...
Michael, how do you spot the bubble early? When is it time to get out? What are the signs?
You don't, that's the trick. So somebody said they love bubbles because that's a very easy way to make money. But you need to get out as well. So but I'm not into that. But you can see the GameStop phenomenon that happened a couple of weeks ago. Because that was a very, very clear sign that it's too much speculation and so on.
Yeah, because hedge funds were shorting that stock. They were selling it without owning it. And then all of a sudden there were some people who just on social media gathered together and said, well, let's buy that stock. And then they put the hedge fund on their knees, really. They couldn't they couldn't cover, they had to cover their positions basically.
Yeah, absolutely.
It was extremely expensive for them.
But it's a really crappy company. The last time they made some money, I think, was 2016 or something like that. So it's but anyway, no, but what we're doing, we're participating, we are taking some of the, I mean, we were up 27-28% last year. I think I spent at least, I spent 2 to 3% of that, which is included in my numbers, for premiums for sell options. So we always buy sell options basically. So if the market goes down, they increase in value. So we have some protection. So it's been money out of the window. It's like an insurance.
Yeah.
So, but the good thing with that is that firstly you get some, protection, and secondly, and that's most importantly, is that you have muscles to go against the market when it's under pressure, because that's when you make money. That's when you can make a lot of money.
Okay, so you create that strength via this sort of put options that you put out. You can.
That's the theory. That's the theory. We always do that, but then can be, of course, challenging.
Are you having fun in your work, Michael?
Yeah, absolutely. I love this. I mean, it's my DNA. I would.
You told me once that because you were pretty nervous around when everything crashed around the COVID, but you said but I don't think you said it then. But you told me I'm paid to be nervous.
Yeah, I'm paid to be nervous. I have people's money here. It's a lot of trust. Yes. So I mean, you always have things going on in your head, thinking of X and Y. But it's a privilege to work with this. It's a lot of. And you meet a lot of smart people, and you meet a lot of enthusiastic, and yeah, it's great. But when there are times when it's really tough. Like a couple of weeks in March. I mean, nobody in it was ugly.
It would go down. Yeah, exactly.
And 2008 was ugly, but then if you manage that, you get rewarded later on.
Is there a saying that after rain there is sunshine?
Absolutely.
Absolutely. Yeah, I can imagine.
So no, but it's great.
Yeah. No, hey, Michael, I really want to thank you for, I know you've been extremely loyal. You've been on our top 10 list since sort of IPO days almost, or a little bit sort of after that, I guess, as you said, 2017, 18 when you got in, but you took a chunk in the company, and you've been, sort of been there and been, just like many others, or that our top owners, they don't, very few are actually doing much with their stock, and then you're sort of also sitting on it, and as you said, waiting. There is an expiry on your wait time, but I'll hope to perform before that happens.
Yeah, so you should feel a little bit of pressure.
Yeah, no, I do feel the Weber pressure. It's fine. I'll take it.
Pressure creates diamonds, so it's
Yeah, exactly. No, but I'm like you. I'm actually taking it very personal. We have 4,000 shareholders. I rather lose my own money than their money. I really feel that way. I think it is, for me, that's why I'm in it with my own money, big time. This is sort of not something we will rise together, or we will fall together. But I think it is the former, that we will actually rise with this. I hope so.
Yeah, so do I. I'm sure it will. I'm sure it will end.
You have just promised me that I will be positively surprised when we are delivering in ways that the stock market can understand.
Yeah, no, because you have some decent leverage here, so you just need to find the machine.
Yeah, no, we will. I think we found the machine, to be honest with you. I think it's just that I think it's just people haven't yet really understood what can happen. But I'm working on. I appreciate that we have to prove ourselves a little bit more. I think people are not seeing what I'm seeing yet, but they will. I hope they will. So on that note, I think Michael, thanks so much for taking this interview. This is the second last in the series. I was actually thinking of having as the last one, but I decided that I'll have the last one with Johan Klingberg, who is managing the Facebook forum for. So that's going to be on Friday.
Yeah.
So I close up with that. But I think this was great, Michael, that you volunteered to do this because you are still our only institutional investor, and we. Of course, we have to hear from.
They will come when things have evolved, as we discussed, during this interview. They will come for sure. Yeah. We'll see. Yeah.
All right, Michael. Thanks. All right. Take care then. Have a good one.
Thank you very much. Thank you. Bye-bye.
Bye.